Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, ensure you like, comment, share, and subscribe to our channel. Now, I want to see another question that has to do with the income statement and the balance sheet. Okay, now this is the Imo State University, the year one students. They are recently written question that's for 2023/2024 section. Okay, now let's see the question. Now it said, use the information below to prepare income statement and statement of financial position. Full stop. Trial balance of Alpha as at 31st December 2023. Now we have the building for 472,000 naira. We have drawings 3,000, purchases and sales 98,000 and 290,000. Stock as of January 1st, 2023 at 6,000. Bad debt 12,000. Carriage inward and return outward 5,000 and 7,000. Now we have debtors and creditors 160,000 and 153,000. We have discounts allowed and received. We have 2,000 and 4,000. We have salary 14,000, provision for bad debt 1,000, provision for depreciation on building 16,000, and we have cash and capital 356,000 and 657,000. Now the additional information, we said A, 20,000 naira purchases was used to extend the building, and additional bad debt of 4,000 is to be written off. B, closing stock of 20,000. C, wages owed 16,000. D, salary prepaid 8,000. And E, depreciate building at the rate of 6% per annum. F, provision for bad debt is to stand at 6% of sundry debtors. Okay, so they're asking us to use this item to prepare the income statement and the statement of financial position. Okay, now let's do this immediately. So now I want to start with the name of the owner is Alpha. Okay, now let's do necessary adjustments before we proceed. The adjustments are very important before we proceed. So we have what I write here, adjustment. Now the first one, let's go to the additional information. There's a 20,000 naira purchases was used to extend the building. 20,000 purchases was used to extend the building. So now what will now be the real purchases that you will have to use? So since they say 20,000 naira worth of purchases was used to extend the building, so we'll now have purchases. If you check in the question there, purchases 98,000. So if you deduct 20,000, so you can get the actual recent purchase value. So I have 98,000 minus 20,000. So we have 78,000. Okay, 78,000 is the recent purchases. Okay, and they also said and additional bad debt of 4,000 is to be written off. They said additional bad debt of 4,000. So if we write our bad debt from the trial balance, now let's check what we have in the trial balance. If there's bad debt, there's a bad debt in the trial balance as 12,000. Okay, 12,000. Now they said additional bad debt is to be written off. So the additional bad debt, so we have additional information. So additional bad debt is from the additional information is 4,000. So we have 12,000 plus 4,000 will give us 16,000. Okay, now I'll be writing where you post this to. Now the 16,000 will be posted to the expenses side in the income statement. Okay, why this 4,000 will go to the balance sheet or the statement of financial position, whichever. Okay, now the next one, which is 2 or B, is the closing stock. They just informed us that the closing stock is 20,000. Okay, okay, let me use A, B, C. Wages owed. Now let's check if there was previous wages there in the trial balance. There is none, so we are just aware wages owed is how much? 16,000. And this will go to both the income statement and the balance sheet. The same thing, this will go to the income statement and the balance sheet, sorry, the trading account. Okay, that's the closing stock normal. Now the next one is D, salary prepaid salary. So we have a prepaid salary salary in advance. Now there's a section in my YouTube that I treated how you treat additional information. Those items, additional information ranging from prepayment, accruals, depreciation, bad debt, outstanding, everything. Ensure you check that. The knowledge of that will help you solve any statement of comprehensive income and balance sheet, any final account. Okay, so either the final account of a sole trader or company or whichever. So ensure you go there, just type additional adjustment of the final account. You'll see there how I treated that. So prepaid salary is salary that was paid in advance. So if you check now, let's see in the trial balance how much was paid. In the trial balance, we have 14,000 there. Okay, now this prepaid salary, the one they say they prepaid should be less. So have less prepaid. Prepaid is 8,000, so that we know the actual that should be charged for this current period. So 14,000 minus 8,000 will give us 6,000. So this is what will go to the income statement, and this is what will go to the balance sheet. Okay, why the next adjustment, and all these adjustments are important so we know the current value of each item. So the next one, which is E, they say depreciate building at the rate of 6% per annum. So we'll have depreciation. So if we have depreciation building at 6%, now remember in this question they said that purchases money was used for extension of the building of 20,000, which we deducted. So it means to know the actual building value, we have to add up that 20,000 to the current value of the building. Okay, so now if we now do that, now let's see the actual value of the building from the trial balance is 472,000. So we have the building 472,000 from the trial balance, then plus the 20,000 that was used for extension. So which is 20,000, that gives us 492,000. So it is this 492,000 now that will conduct the depreciation on. Okay, so it is now, they said depreciation building at 6%. So we now have 6 over 100 times 492,000 over 1. Okay, so 6% on 492,000, using our calculator, it will give us 29,520. 29,520. Okay, so that is E. Now let's go to F. So they say provision for bad debt is to stand at 6% of sundry debtors. So we have provision for bad debt is to stand at 6% of sundry debt. That's 6 over 100 times, what is the debtors figure? The debtors figure is 160,000. Now, but we are not using 160,000. Now, like I said, in this adjustment, there are ways to treat item. Now, the bad debt, we want to check, we want to get what is the provision, the money we're going to keep aside in case there is bad debt on the debtors. But there is an amount that is already bad from the debtors totality. So we are supposed to remove that amount first from the debtors figure to know the current debtors figure before charging the 6%. Now, you only do that when the bad debt occurs in the additional information. Remember, they said additional bad debt is 4,000. So to know the debtors figure, we want to calculate the provision for. The provision should be on good debt, not the one that's already bad. So when I have debtors figure, the debtors figure is 160,000. 160,000 minus 4,000 that's already bad. So 160,000 minus 4,000 will give us 154,000. 154,000. Okay, 154,000. So it is this 154,000 will calculate 6% on. So it should now be 6% on 154,000. We'll now have 9,240. 9,240. Now this 9,240 is what we calculated just now. So it means this is a new provision. New provision. Now let's check in the trial balance if there is an old provision for bad debt. Old provision for bad debt. Okay? Old provision for bad debt. Now if you check there, you see provision for bad debt is in the trial balance and it's 1,000. Okay? So we said the old provision is 1,000. Now look up. If old is 1,000 and the one you calculated now the new one is 9,240. What happened? It means it increased. It increased from 1,000 to 9,240. Okay, so there's a high probability of bad debt to occur. That's why we're going to put more money. So it means that's an increase in provision for bad debt. Increase in provision for bad debt. So it will now be 9,240 minus this. This will now give us 8,240. Okay, it will now give us 8,240. Now let's check if there's any additional information. There is none. So this is the adjustment that will make us to now prepare our income statement and the balance sheet. Okay, now let's do that. Now, if we now have the income statement, as at 31st December 2023. Okay, so if we have, now let's start. Now, our normal is to start with our opening stock. I will check that the opening stock is from the question given is 6,000. Okay, 6,000. Now the next thing is to add purchases. Now look at our purchases. This is the recent value. Remember the items you have done adjustment for. So it is 78,000. So 6,000 plus 78,000 with my calculator will give us 84,000. Okay. Now check if there's a carriage inward and also return outward and also return inward. So we now have to add carriage inwards. Now what's the carriage inwards? Now the carriage inward is 5,000. So 84,000 plus 5,000 gives 89,000. Okay, so when I say add, now in this now, wages is always added once it is separated from salary. Okay, the aspect of this lecturer necessitate that you add wages if it is different from salary. Okay, so we'll add wages 16,000 that is owed. So we have 16,000. So 89,000 plus 16,000 gives us from our calculator 105,000. Okay, 105,000. Now let's return outward. What's return outward? What's the value there? It is 7,000. So 105,000 minus 7,000, this will give us 98,000. Okay, 98,000. So the next thing from is to less closing stock. The closing stock. Now the closing stock will now be from the question there 20,000. Look at it, 20,000. So I have 20,000. So 98,000 minus 20,000 will give us 78,000. Okay, that's 78,000. So we now have our sales. What's the sales value from a question there? Our sales value is 290,000. Now let's check if there's return inwards. Is there any return inwards in the question? There is none. Okay, so sales minus, now this is what we call cost of goods sold. Now 290,000 minus 78,000 will give us the gross profit carried down. Okay, the gross profit carried down 78,000. 290,000 minus 78,000 using my calculator will give me 212,000. So that this will make up 290,000, and this will be 290,000. So gross profit carried down is brought down here as gross profit brought down. So 212,000. This will also give us 212,000. Okay. Now let's move to the expenses. So let's start from the trial balance. The first expenses there is bad debt. Now as we are writing it, let's check if there is adjustment. What is bad debt here? Bad debt, this is the amount that comes to the income statement. We did adjustment. So 16,000 is what comes there. Okay. Why? The next one is The discount allowed. So we have discount allowed, no adjustment was done as regard discount. The amount there is what? 2,000. Okay. Another one is the salary. Salary, we did an adjustment. Now this is the money that comes to the income statement as 6,000. 6,000. Okay. So the next one is provision for bad debt. Provision for bad debt. Now we are not writing the one in the trial balance because we did an adjustment. Okay, look at the adjustment. There's an increase, so that's why it's an expenses. So it becomes 8,240. Okay. Now the next one we have depreciation. Okay. So we have depreciation. Now what's the depreciation value? Now look at depreciation. Here 29,520. So we now have 29,520. Okay. Now the next thing we're going to check in the income side is our discount receive. So I have discount receive. How much is discount receive? 4,000. 212,000 plus 4,000. So this will now give us 212 plus 4,000 will give us 216,000. That's the only income that is received there. So if you add all this, it's now up to 216,000. So we deduct it from 216,000. Okay. So we'll now have a net profit. So 16,000 plus this, deducting it from 216,000 from our calculator, it will give us 154,240. 154,240. So that's the income statement. Okay. And the final part now is the balance sheet. Now I'm looking for where we're gonna clean to do the balance sheet. Okay, so let me clean this part because I need this part. So you can pause the video and write down the important value we'll get from this is just our net profit. Okay, so if we have the balance sheet as at 31st December 2023. Okay, so if we have that, so we'll have, now let's start with our capital. Okay, so the capital from the trial balance there is 657,000. Okay, it's 657,000. That's the capital. So we now have add net profit. And what's the net profit here? 154,240. 154,240. So 657,000 plus 154,240 plus from our calculator will give us 811,240. Okay, 811,240. So the next thing is to less drawings. Now what's the drawings there is 3,000. So we have 3,000. 811,240 minus 3,000. This will give us 808,240. 808,240. Okay, so that is that. Now let's now compute our liabilities. Now what's the liabilities? Now let's check in the trial balance the liabilities that will come here. Let's start from up. So we have building drawings, purchases, those are not liabilities. Now creditors is one of the liabilities that will come here. Creditors is 153,000. Okay, 153,000. So that is that. And let's check on any liability that will come here. I have discount, salary, all those are not liabilities. Now let's check the additional information. What we treated. Now remember, wages owed. Wages is an expenses. Owed is accrued. So accrued expenses is a liability. So wages owed is 16,000. Okay. So now that is the only liabilities that we post there. Now let's now do. Now we have our fixed assets. Now this is cost, this is depreciation, and our net book value. Okay, so the first fixed asset, or what we call the non-current asset, is the building. The building. Remember, the building have a new value when we added 20,000. So that's 492,000. So we have the cost is 492,000. Okay, 492,000. So we now have depreciation of the building. Now, if you check in um if you check in the question, you see provision for depreciation. We have provision for depreciation on building. Provision of depreciation on building, it is 16,000. The old provision. Now we look at the new provision with depreciation we calculated, not bad debt with depreciation, 29,520. Okay, 29,520. Now, if you add them together, that is what is supposed to give us what we call accumulated depreciation. So this is 0, this is 2, this is 5, 9 plus 6, 15, that's 5, this is 2, this is 5. So 45,520 is accumulated depreciation. How did we get this? This is the one from the trial balance, the previous one, provision with depreciation on building. It is there, 16,000. Then add the current one we calculated, giving the 6%. Okay, so both of them is what will give us accumulated that will be posted here. So this is now 45,520. 45,520. So 492,000 minus 45,520 is 446,480. 446,480. Okay, 446,480. So that is that. So if we close this to the net book value, so we now have a current asset. So what's our current asset? Now let's also start from up COP there. We'll have our cash. Okay, the cash is 356,000. That's the cash. Okay, now we have a closing stock. Look at the stock, 20,000. Stock 20,000. That is the second time it's appearing. We also said anything that appears in additional information will appear twice. We are preparing this account. So the next one is the debtors. The debtors. So have the debtors. Now the value from the trial balance, the debtors is 160,000. Okay, watch what we do here. So now less bad debt. Less bad debt of 4,000. That 4,000. So 160,000 minus 4,000 will give us 156,000. Okay, 156,000. The next one is to less provision. Remember the provision for bad debt. Now, not the increase now. Okay, the essence of the increase was to know if we are going to add more money or get more money. So, but the one we are lessing now is the one that we calculated, the actual one we calculated. Okay, which is 9,240. So if we have less provision of 9,240, so remember, look at what we did here. The debtor's actual figure 160,000 from trial balance with less bad debt. In the additional information, if this bad debt was in the trial balance, we are not going to less it because it has appeared before. Okay, so 160,000 minus 4,000 gives us 156,000. Now we less the provision, the actual one 9,240. Now if you do this, 156,000 minus 9,240 will give us 146,760. 146,760. Okay, 146,760. So the next one is the salary, the prepaid salary. Prepaid salary is an expense. So prepaid means payment in advance. So prepaid expenses is a current asset. What's the prepaid salary? 8,000. Look at the one in the additional information, not the one that we got the difference. So if you add all this, 356 plus 20,000 plus this, if we add it together, it will give us 530,760. That is what we are supposed to add with this. So if we add, okay, let me do this. So this is 8,000. So if we add 356 plus 20 plus 146 plus 8,000 from my calculator is 530,760. So it will be 530,760. Okay, 530,760. That's the value there. Yeah, pick up the space. So if we now add 446,480 plus 530,760, so the final value will be 977,240. 977,240. So if we also add 80 08,240 plus 153,000 plus 16,000 will give us 977,240. So this is the income statement. Okay, so it balanced automatically. So it means what we did is what correct. Okay, so that is the statement of financial position and the statement of comprehensive income given the question. Please ensure you like, comment, subscribe to this channel. Now doing this takes time. Okay, it takes a lot from us to ensure we go through it, solve, do videos, edit, upload on this platform. So one of the ways to encourage us is to share it, subscribe, like, comment, so that we know we are doing something significant. Thank you very much. Ensure you follow us on our platform. Thank you very much.